students, in this video I will be doing ratio analysis and we're going to do the June 2023 common test paper, which is good practice for your paper. Okay, let us start. So it says choose a term from column B that matches the description in column A. Write only the letter A to D next to the question number and answer in the answer book. For example, 4.1.5 is equal to F. So let us read the terms. It says ability of the business to pay off all its debts. Now, the word all, right? The word all is going to tell you that in order for a business to pay off all of its debts, right, the answer here will be solvency. So I go to my answer book, 4.1.1, solvency. Then ability of the business to pay off its short-term debts. The key word is short-term debts. So if I want my business to pay off its short-term debts, then I want my business to be liquid. There must be cash flowing in. So that means that that answer is D. Okay, just let this get into focus. Right. Then it says the benefit that shareholders receive for investing in the company. Now we all know that if you are a shareholder and you invest in the company, then you want to, or you do expect a return. So this is return on equity or return on shareholders' equity. So that answer is B. Whenever the shareholders are investing in the company, or whenever they talk about the shareholder investing in the company, you are going to remember return on shareholders' equity. Okay, so that is B. And then the last one, it says the extent to which a company is financed, the famous ratio, the debt to equity ratio, which tells us whether our business is positively geared or negatively geared, how much are we financed more by equity or are we financed more by debt, right? And we refer to gearing. So that's A. And this is 4 marks, and you could have easily gotten that 4 marks, okay? 4.2.1 says, quote and explain 2 financial indicators which proves that Lewis managed to control expenses more efficiently and is more profitable. Now, the key word here, they don't want you to quote any financial indicators. They want you to quote a financial indicator where it says that Lewis had control of expenses, right? He was able to manage it more efficiently and it is more profitable. So you are going to use a profitability ratio, but one which shows that the expenses for the year went down. Remember that a decrease in expenses is a good thing, right? So we want a decrease in the ratios. Now, I hope that you have read this question in advance because I didn't at the beginning of the video just for time purposes. So let us just quickly look at the information that was given to us. Okay, we have the financial indicators. I'm going to go and look at the profitability indicators. Now, the profitability indicators is usually at the top, right? Operating profit, sales, net profit after tax. Okay, it's all times 100 over 1. And right, if you are given a profitability ratio and you don't know how to calculate it, the name of the profitability ratio is how you calculate it. So for example, this says operating profit on sales. This on is the dividing factor. So operating profit will be on the numerator, sales would be at the bottom, times 100 over 1 will give you 23.4%. Okay, that was just by the way. Okay, now let's look at our indicators. So it says operating profit on sales was 20.7% and it has now increased to 23.4%, which is good. That's good. Our profit has increased. Then it says operating expenses on sales was 17% in the year 2022. and now it is 13.4% in the year 2023. So it did decrease. That is what we want, right? And then our net profit on sales, it was 18% and then it went to 14.6%, right? This is net profit on sales. Now, ideally, we would want this ratio to increase. So net profit on sales is immediately eliminated out of the equation. So we are just going to use operating profit on sales and operating expenses on sales. Now, why am I using two ratios? Because the question specifically asks me to quote two financial indicators. Okay, so the thing that I would say is, let me just position this so you can see. I would compare now. I'm going to quote the ratio. I'm going to say whether it increased or decreased, and I'm going to say by what, right? So the operating expenses on sales would be the most obvious one to quote, and it went from 17 to 13.4%. So I would say operating expenses on sales decreased from 17% to 13.4% by 3.6%. And if you're not sure how to get the by, right, all you're going to do is take your calculator, 17 minus 13.4, and then that's how you get the by, right? Then the next indicator, I said I'm going to quote the operating profit on sales, because remember that income minus expenses is equal to your profit, right? So, sales minus your expenses is equal to your profit. So you want to know how much of profit you was able to secure or how you handled it well. So that is why you will use the operating profit on sales if you didn't understand that before. Okay, right, so now we're going to say operating profit on sales increased, right, from 20.7 to 23.4% by 2.7%. Okay, notice that I put an arrow and I put a 2. This is two types of way you can present your work, but please note that you must say whether it increased or decreased, what it was to what it is now, and by what, right? Did it increase or decrease? Okay, and this is 4 marks, right? This is 4 marks. So with the multiple choice, you already have 8 easy marks. Okay, 4.2.2 says, explain whether the change in the dividend payout rate in 2023 will benefit the company or not. Okay, now please remember that my dividend payout rate is basically my earnings per share over my dividends per share. Okay, so what do I mean by that? If I go to my earnings per share, I will see that it's 68 cents, and if I go to my dividends per share, I will see that it's 40 cents. So when I put this in the calculator, I said DPS over EPS. My DPS is 40, my EPS is 68. So it means out of the earnings, out of the 68 cents that I earned, I paid 40 cents of this to my shareholders, or 40%. So my dividend payout rate from the earnings is 58.8, which is 59%. Okay, so that is how I got my dividend payout rate. It basically tells me from the earnings that I made for that year how much was paid out in dividends, right? So it says, explain whether the change in the payout rate will benefit the company. So you are going to quote the ratio, whether it increased or decreased And what does this mean, right? So I would say now that this dividend payout rate, it went from 71% to 59%. So dividend payout rate, right, it decreased from 71% to 59% by 12%. Okay, right. Now what does this mean? Now, very simply put, if the dividend payout rate, where can I write it? Yeah, if the dividend payout rate DPR increases, right, it means that you want to make the shareholders happy. But if the dividend payout rate decreases, then you are retaining funds for future growth. Okay, that is just how you will manipulate your answer each time. So for example, in 4.2.2 it says the dividend payout rate decreased from 71 to 59%, right? That means that if we paid out 71% in earnings for the 2023 year, then I would say 100 minus 71 that I paid out. You're just going to take your calculator, minus 71. I would say um, oh sorry, it wasn't 71 this year. It was actually 71 last year. Okay, please don't be like me and make the same silly mistake. So it was 71 last year, so it decreased to 59. So I'm going to say 100 minus 59. Okay, I can say that in brackets. That means that 41% is retained for future growth. Okay, 41% is retained for future growth, right? Likewise, if the question was reversed, okay, which means that it was 59% and it increased to 71, right? I would say 100 minus 71, that's only 29% of funds retained for future growth. I would just say that the directors decided to make the shareholders happy, and that is the reason for the 71% payout rate. Okay, that is just an example, but the proper answer for 4.2.2 is that the dividend payout rate decreased. So all I'm going to do is quote 71 to 59, and that would mean 100 minus what it is now, 59 is 41. 41% is retained for future growth. Okay, and that is 3 marks.